Okay. Good afternoon, everybody. I'm Alaina. I'm co-founder of Options Bay and Investing Day, and we're a platform. Basically, we teach people about their money. We're about to get into some real estate stuff, but we're really big on long-term investing, options trading. We do have a community on Slack. The community is free. I can drop the link in here if anyone just wants to see what we're about. But yeah, so today, really one of the biggest things we like to focus on is the mindset, because if you haven't already, you'll learn really quickly in the market that mindset is everything. You can have all the strategies in the world, but if the mindset is not what it needs to be, it really doesn't work for you. So let's get into this. All right, so the first thing I like to do is the risk disclosure. I'm sure you guys have seen this before, but just remember that investing and trading, they do carry significant risk. Nothing's guaranteed. We're just gonna go over some stuff for educational purposes, and it shouldn't be considered financial advice. And also, just remember to always invest responsibly. So throughout throughout this presentation, I did sprinkle some quotes in here that I actually like, just because like emotion is such a powerful thing for a trader. And so today we're really going to go over some things that we can do to like manage emotion, identify them, and also identify how our emotions can like manifest in our trading and in the common errors that are made. So the first quote is from Plato. It says, "We can easily forgive a child who's afraid of the dark. The real tragedy of life is men who are afraid of the light." So I do like this quote because the stock market presents so many opportunities for us financially. But a lot of times early on in your trading journey, you may stumble, make mistakes. There's a really extensive learning curve, just depending on where you're starting. But I think it's really important to remember, like, as you learn and develop as a trader, you really don't want to carry the loss and that fear with you into your new trades. So just always remember, as you get better and you develop, you're not the same person that made the mistakes in the past. So you really don't want to bring that with you into what you're trying to do now. So trading psychology, it refers to the emotions and mental state that helps dictate your success or failure when you're trading securities. Trading psychology represents different aspects of an individual's character and behaviors that influence their trading decisions. So one thing I quickly learned in the stock market is that who you are as a person is directly related to who you are as a trader. If you're someone who's like extremely disciplined, really regimented, very detail oriented, analytical, you're probably going to soar in the market, right? If you're someone who, like I was in the beginning, really free spirit, kind of do my own thing, just go with the flow, that doesn't fly in the stock market, right? So I actually had to take a step back. I had to develop some discipline in my personal life, as far as like getting morning routines and sticking to a trading plan, sticking to my strategy in my trading rules. Those are things that I had to actually develop in my life in order to translate into my trading and to help me improve as a trader. So human beings are emotional creatures. We have psychological and cognitive errors that influence our financial decision making. Emotions, they provide data on how we operate, for better or for worse, obviously, and it's at an unconscious level. So our emotions give us information on like our underlying belief systems, like our biases, our goals, our perspectives. This has a direct impact on your ability to make decisions. Just an example of this that I experienced personally, and this really goes back to like 2020. But if you remember like the news cycle, and this happens to a lot of people, but sometimes you can get so consumed by news, especially with like the pandemic. And even now, like there's just so much going on. It can kind of help you, it can develop a bias, right? So like there are days when all this horrible news comes down, bad economic data, news on the war and inflation. And then like you kind of consume that and you develop this bias, like, okay, everything's going to go down. The market's going to go down. It has to go down. But you want to be aware of those biases, right? Because we do have bounces. We do have days where the market is green, where we can take advantage of the upside. So you don't ever want to fall into that, like, you can only see one side of things. You always want to remain objective as a trader. and really be able to trade what's in front of you. Which we know there's a lot of bad things going on. But again, we don't want to miss out on those opportunities to play the upside just because our personal feelings are telling us that it shouldn't be going up, right? So just always be objective. Another thing is your self-care. And this goes back to really getting to know yourself. So with the self-care, as far as trading goes, I really like to make sure I get good sleep, make sure I eat healthy breakfast, make sure I get outside and get exercise, take a break from the screen. Just the smallest changes like that will make the biggest difference in your trading. And again, getting to know yourself. One thing we're really big on is journaling. When you journal, you know, obviously we want to journal our trades, but we also want to journal our emotions and how we felt while we were trading, right? So you might have, you know, fear, anxiety, overconfidence, just any type of like, maybe even anger, depending on what happened. But a lot of times, you know, you might start to see mistakes, or you might make a series of mistakes and you don't even realize there's a correlation there. And there's like an underlying issue emotionally that you may not be aware of. So to have it on paper and be able to go back and reflect on it can really help you like pinpoint those things that are causing you to make these errors. Another thing is random reinforcement. This occurs when traders are rewarded at random for behaviors that are not actually of their own doing. You'll see this a lot with like earnings plays. You'll see it with meme stocks. People come to the market with, you know, absolutely no experience, and they make a ton of money off of essentially gambling, right? They're just doing things that happen to work out for them. One thing that's really important to remember is like when you're investing in trading, you really want to have like a building mentality. Like you want to think about building in terms of wealth, right? We talk about a money wall, right? We build it up brick by brick. When you get in the mindset of making, right? Making versus building, making is like fast money, you know, like you're at the casino. So like you really always want to have the mindset of like building something, and building something takes a plan, right? It takes a plan. Sorry, building something takes a plan. And that's just something you really want to be mindful of. So anything you do in the market that works out for you, you want to be able to repeat it. And then again, because of random reinforcement, traders may grow overconfident in their ability, even though it may be objectively unfounded. So like a lot of times people will make a ton of money in the market and then give it right back, right? Because they actually didn't make it off of a system or a plan. They just made it off of luck, and maybe their luck ran out, right? So just keep that in mind. It's super important to have a plan always. All right, so greed is a basic part of animal nature. Being against it is like being against breathing or eating. So greed, again, it's human nature. In the market, of course, most people in the market want to make money, right? So that's just a part of it. The thing with greed is you don't want to let it consume you. So back to our money wall, right? We talk about building a money wall brick by brick, slow and steady growth over time. Managing your greed will help you, you know, secure profit. It'll help you prevent from over trading or holding trades too long, letting them reverse on you, things like that. So you want to be aware of it. You don't want to completely ignore it, but just use it to your benefit. You know, just be mindful when you feel this way. So just ask yourself, have you ever experienced any of the following common execution mistakes? A lot of these, again, are triggered from emotion. So forcing mediocre setups, hesitating on entries, exiting too early, chasing price action, moving your stop losses, moving your profit target before it actually hits, or talking yourself out of a good trade. And again, emotions are signals of hidden flaws that undermine our trading. So we really want to focus on pinpointing them and then building a plan to really attack them so we can develop and be the best traders we can. So common solutions. Oftentimes traders find their own solutions to manage their emotions instead of exploring the underlying cause. So that's not to say these solutions aren't nice. They're like Band-Aids, right? They're Band-Aids, but we still have an underlying thing we need to address. So things like moving a stop to break even, walking away from an active trade so you don't interfere with it, quitting early just to make sure your day was profitable, leaving sticky notes on your monitor. I used to have like 10 sticky notes all around my monitor, and it was a little chaotic. But I didn't realize, like, there were other things I actually needed to work on that the sticky notes were just kind of placating. Um, Constantly reminding yourself of basic concepts or taking like extended time off from trading, which again, there's nothing wrong with these things, but you always want to understand the underlying issue as to why you're doing these, to address an issue, right? We want to know what the actual issue is. So the problem again with these solutions is that you're minimizing your profitability as well as your ability to adapt and develop as a trader. Don't fight your emotional state. Again, just use your emotions as your signals and really try to understand what they're telling you. All right, so the book that I absolutely love, it's called The Mental Game of Trading. And when I read this book, it was like a light bulb went off. We have a book club in our community, and we actually are reading this book now with them. But this really helped me identify like what I was going through as a trader, right? So the author breaks down your A game, your B game, and your C game. And so everything I do, as far as preparing for the market, just my self-care, everything that I do, it really is centered on helping me not only get to my A game, but to maintain it and to stay in that zone, right? So during your A game, you're very relaxed, you're decisive, you're patient, you're confident, you have conviction, and you trust yourself, right? When we talk about trusting yourself as a trader, that's huge, right? If you're not able to trust yourself, it's harder to stay in your positions. It's harder to even get in a position. It just makes it really cloudy, right? And we want to be as clear as possible, as precise as possible when we're making decisions with our finances. All right, so your B game, this is going to involve overthinking, attention on the wrong markets, losing focus, missing obvious trades, constantly checking back on your P&L, slower reaction times, and then going against your gut. And then your C game, that's where it gets really, really hairy, right? So in your C game, you're absolutely distracted, you're risk averse, you might hesitate, you're forcing things, you have no patience, things like negative self-talk, like I can't do this, this isn't for me, this is so hard, things like that, self-doubt, and then trading your profit and loss, right? So just as we break down this A, B, and C game, really try to see which one of these you may fit into. And again, these are fluid. So you may have days where you're on your A game and days you're on your C game. But the goal is to get into the A game and figure out the ways and things we can do to stay there. All right, so tactically, during your A game, you have a clear understanding of context of the market as a whole. You have a clear understanding of your indices and correlations with the NASDAQ, the S&P, and the Dow. A clear understanding of your location, your price levels, your price action, your chart, your indicators. And then you also are letting the price come to you, right? You're letting the trade develop and you're taking advantage of it. You're not chasing it. And you also see trapped traders, right? Yesterday, we saw a lot of trapped bulls, right? We saw a lot of people jump in to play upside yesterday and then get totally annihilated this morning, first thing. Being on your A game, you can identify that. During your B game, right, you have a less understanding of context, correlation, or location. Scalping for a few ticks, but you're not letting things kind of pan out. You're not aware enough to sit out or pick entries. This is a big one. One thing, actually, we'll talk about this later. We'll talk about this in a minute. But another one is like cutting trades too early, not letting them develop, and really not getting a good read on the volatility. And then your C game, again, this is chasing price action. You're fading directional moves, cutting trades too soon, not respecting your stop losses. You're being impulsive, overreaction. I had a student that I had to work with, and I love him to death, but he gave me a run for my money. He was so impulsive and he just kind of panicked. Like it was kind of like the sky is falling every day. And it was like, he'd be like, I'm in calls, I flip to puts, I flip to calls, I flip to puts all day long. He was trying to play every single move. And I was like, okay, we need to breathe. We have to slow down. We don't want to overtrade. We can't make all the money, right? Your goal should never be to try to catch everything. But it was really hard for him, right? It was really, really hard for him to kind of break out of that thought process. Like he was like stuck in C game. scaling without planning for price action, right? We always want to be mindful of what the chart's telling us. We definitely don't want to scale into a reversal. We don't want to, average down into a losing position. We just want to be really mindful. And again, back to the A game, we really want to focus on the things we can do to get ourselves here. All right, and errors. So this is not to say that errors don't happen, because we know in trading and investing, losses are inevitable, right? There's no such thing as risk-free investing. We're still working. We're still working. He's getting better. He's actually, we talked him into trading less, so we're not trading as much. We're trading smaller position sizes. We're working with him. But one thing you'll learn in the market, it's like bad habits are really hard to break, right? Especially with that random reinforcement. If you get lucky and you're trading, I always say be a sniper, not a cowboy, right? We want to go in, take the A+ setup and go on with our money. We don't want to go in the market and kind of take shots at everything, sprinkle a little money everywhere. We don't want to do that. So we are definitely still working with him, but he's getting better. I will say he is getting a lot better. So yeah, so as far as the errors go, right, there are different types of errors that you make depending on where you're at on the spectrum. So your A game, this is going to be like learning mistakes, right? So this is going to be unavoidable weaknesses in your tactical decision making. So this is something like, black swan events, like, maybe the Fed comes out and says something that totally changes your setup, or maybe your brokerage messes up, right? I went to a new brokerage about a year ago, and I didn't understand the stop losses. I didn't take time to practice executing over there, and I literally blew it, right? So that was a mistake, right? I was totally focused. The setup was great. I just didn't understand the platform. So this is something it is your fault as a trader, but these are things that are unavoidable, right? So in your B game, these are going to be marginal mistakes. This is going to be a blend of weakness in your tactical decision making and mental or emotional flaws. And then your C game, this is going to be obvious mistakes, right? This is going to be mental or emotional flaws caused by your emotions. They're either too intense or your energy is too low, right? We're not focused over here. Things like this, over leveraging, chasing a play, gambling, just any trading without a stop. These are things that are avoidable, right? These are things that you really, probably shouldn't have been trading in the first place. When you're in C game, you want to identify that and really avoid trying to trade in that mindset. All right, so these are some signs that you may be ignoring your C game. Working really hard, seeing progress, but randomly having like big blow up days where you forget everything and all your efforts were wasted. Has anyone ever had like a series of big wins, or not even big wins, but a series of profitable trades, and then you just over leverage one time and wipe everything out, right? That's C game. That's impulsive. We're over leveraged. That is absolutely C game. Constantly jumping around, looking for the next thing to learn, especially in a drawdown. I see this a lot too. We see people that like jump from community to community and they try to learn every single strategy, but it's like every strategy is broken for them, right? So it might not be the strategies. It might just be something that we have to do internally and something we need to evaluate on our end to see what the problem actually is. Rationalizing bad days and moving on without much thought about why it happened. I've literally heard someone say, I blew up my account, so I just added more money to it. I blew it up again, I just added more money to it. So that's not what we want to do, right? We don't want to get in the habit of constantly replenishing money for mistakes that we're making. We want to identify why we're actually making those mistakes. Again, constantly coming up with new strategies with every insight, thinking every time you learn something new, that's going to be the thing that puts you over the top. Another one is becoming consumed by healthy activities that you think are the answer. You might say, okay, I've lost a couple trades back to back to back. I'm just going to start working out twice a day, right? I'm just going to start working out really hard, and that's going to change everything in the market for me. That's not the problem, right? You're not addressing the problem. Lacking trust in your trading, feeling like your own worst enemy. The worst thing you can do is try to jump into the market and not trust yourself. Again, you want to be confident in your decision making, and that confidence comes from those good decisions. And so when we talk about good decisions, it's not always monetary. Like a lot of times people think like, oh, if I make profit every time I trade, then I'm constantly making good decisions. That's definitely not the case, right? Because again, you have random reinforcement, but good decisions can also be, I cut losses early, right? I didn't let my position bleed out, or I decided not to force a trade today because the market was choppy, or, I didn't eat this morning and I'm sleepy, so I'm not going to trade. Like those are also good decisions. And so that's something to really focus on as you develop as a trader. Just remember, all good decisions, they don't have to be monetary. Even if you take a YOLO play and you make a ton of money, you didn't follow a trading plan. You just did something that worked out for you. So that's actually not a good decision. And then, sorry, there's a train around here. Being unable to stay in the zone for long or reach it often. This goes back to that A game, right? So you might find yourself, on certain days where you're totally focused, everything is crystal clear and it makes sense to you. And then it's just not something that you can sustain, right? That zone is not a place that you can sustain. So that's something else to pinpoint. And then secretly believing it's possible to always be at your best. This is a big one. For me personally, like I think of myself as sort of a perfectionist. And so early on, I always felt like, I can do this. I have to make something happen. Like I always felt like, I could always bring my A game to the market. And that's not how life works, right? Things happen, life happens. There are days where I'm stressed out, I'm tired, I'm hungry, what have you. But those aren't days where I'm coming into the market because I'm not at my A game. And that's what I need to be successful consistently. All right, so here's another quote for us. Anger is a bad advisor. This goes back to your revenge trading, right? Anytime you have a big loss in the market, it's good to take a break, right? It's good to take a step back, really understand your loss, also the emotion, like what caused you to make this mistake, and really just to cool off. Like you want a cool off period where you can come back focused on your A game. So you definitely don't ever want to let anger drive your decision making in the market. That is bad business. All right, so in this book, he also outlines something called the mental hand history. And you can actually walk through this with each of the trading emotions, whatever you're experiencing. But these are the steps. So like the first one is describe the problem in detail. So in this example, we're talking about losses, but it says, I cannot accept big losses. So the next step would be explain why it makes sense that you have this problem or why you think, feel, or act this way. And so the answer, my strategy is profitable when I follow it. All right, so the next one, explain why this logic is flawed. So this is basically saying, by saying that my strategy is profitable, I'm implying that I'll never incur big losses, whether or not I perfectly execute my strategy. All right, so then we come up with a correction to our logic, our flawed logic. I must learn how to take a loss, embrace the feeling of losses taken with good execution, and just understand that's part of the process, right? We can still make mistakes in our A game. What happens here? Okay, what happens here is traders will train their minds to say, a loss is unacceptable under any condition. And so once you kind of train your mind to say losses are bad and they're unacceptable, then when you take a loss, it's devastating. And it doesn't have to be because it's a part of this. Like our losses are a part of the building process, right? Failure is a part of success. So you don't want to train yourself to say, losses are totally unacceptable. You want to focus on risk management and how to manage the losses emotionally as well as with your finances. You want to make sure you're using stop losses. You want to pay attention to your position size. We don't want to over leverage. You never want to go full port. Don't put all your money in one thing at one time. So we mitigate. And so the last step here is explain why the correction is correct. A profitable strategy will incur losses sometimes. And sometimes they can be big, but I can mitigate to the best of my ability. My edge accounts for that. So again, if you did everything you could to mitigate that loss, now there's a motorcycle outside, sorry. But if you did everything you could to mitigate that loss, you followed all of your trading rules, it's not a failure, right? It's not a failure because the market, again, it gives and it takes. Our goal is to have our wins outweigh our losses. We want to manage our losses to the best of our ability, but we don't want to completely avoid them. We don't want to ignore them. And we definitely want to just make sure we understand what happened so we can move forward. But you don't want to carry that fear with you into the next trade, right? It's like taking emotional baggage from a bad relationship into your new relationship, right? This is a whole new situation. So just keep that in mind. All right, so the morning routine, I'm a really, really big fan of morning routines. I like to have mine really just like help me get to my A game, right? If I'm not there, whatever I do in the morning is designed to get me there. So again, you wanna have a trading plan. This doesn't necessarily have to be done in the morning, right? It can be done anytime, but you wanna develop a trading plan. So with your trading plan, you wanna have a plan for your entry, you wanna have a plan for your exit, and you also wanna have a loss plan, right? When am I gonna cut losses? How much of this am I gonna let go against me before I cut it? And you wanna respect your plan. You definitely wanna get a good night's sleep. You don't wanna trade when you're tired. As traders, we want to be adaptable and nimble. We want to make sound decisions and we want to be confident in them, right? So we want to be able to be quick on our feet and in our thoughts. You want to eat breakfast, right? The worst thing you can do is be hungry and trying to focus. I've literally had food from DoorDash on my porch for like 2 hours before because I didn't want to leave my trade. So definitely make sure you eat, at least, keep a snack or something close by, water, coffee, tea, free your environment of distractions. I have a little puppy. I have to take her out every morning before I get into my market stuff. Because if I don't, she's going to drive me absolutely insane all morning until she goes out. So I just like to handle that before I jump into the charts. If you have time, work out. I'm really big on affirmations. In our community, I post affirmations every single morning, rain or shine, just because it sets the tone for the day, right? We want to set ourselves up for success in every way we can. All right, so confidence is a feeling which reflects on the coherence of the information and the cognitive ease of processing it. So again, we want to be confident in something that works, right? We don't want to be overconfident in gambling or overconfident in our abilities. We want to really have that conviction. So I love this quote because I do think you want to be a confident trader. You just don't want to be overconfident because that can actually work against you. All right, so now we're going to get into some psychological traps. If you're someone who's already been in the market and trading, you've probably experienced some of these, but it's always a good idea to identify them or at least learn about them so you can identify them in the market before they happen. Every time I go over these with our students, they're like, I feel attacked or this is me, but it happens. So the first one is the anchoring trap. The anchoring trap, this is basically over-reliance on what you originally think, following preconceived notions instead of facts. Excuse me. So in order to avoid this trap, you want to remain flexible in your thinking and open to new sources of information. Understand that things change, and the reality is any company can be here today and gone tomorrow. So the example that I used here was Facebook. I used to be the biggest cheerleader for Facebook, but now things have changed, right? So not this last quarter, but the one before, Facebook had that huge drop after earnings. They basically said they're losing users. They've lost ad revenue because of some changes Apple made. People are on TikTok. They just kept mentioning TikTok in their earnings report. They just kept referencing TikTok. So things have changed for Facebook. I'm not saying, that they're never going to be okay, but fundamentally things have changed. So a lot of investors actually cut Facebook because things changed on paper for them. They changed fundamentally. You do have a lot of people that are still holding Facebook. And I'm not saying they're in this anchoring trap, but you always want to be open to that new information because things absolutely did change for them. Facebook, and I would even throw Netflix in there. Netflix is experiencing something similar. So the sunk cost trap, this is emotional commitment to a bad investment. This is essentially you're psychologically protecting your previous choices or decisions. This goes back to us confronting losses. So it's hard to take a loss or accept that you made a bad decision. But the sooner you accept a loss, the better. An example I use here is the meme stocks, right? So everyone has their own theories and things on the meme stocks. I know it's a hot topic, but you had people who jumped in GameStop at the top, right? And they're just holding there. They're literally just waiting on, a crazy run up to happen again on GameStop. Same with AMC. A lot of these meme stocks, they got pumped up. and then there's a lot of bag holders left. And so what happens there is that emotional commitment, right? You're emotionally invested in your investment. You've married your idea and you won't budge. So again, the sooner you can accept your losses and confront them, the better off you're going to be. So next is the confirmation trap. I see this all the time on like Twitter, on stock twits. I see it everywhere. But this is basically you're seeking out other people who have done this or are still making the same mistake. So you really, again, want to always stay objective. You don't want to rely solely on the source where you got the bad information. If you often find yourself asking other people how they feel about a bad decision you took, you may be experiencing this trap. And again, it's just seeking comfort from somebody in a similar position. I see this every day online. Like people will take a bad trade, they're down, 80, 90%, and they're like, who else is holding this? Like anybody else still here? And it's just like, they're literally in the confirmation trap. All right, so talent without discipline is like an octopus on roller skates. There's plenty of movement, but you never know if it's going to be forward, backward, or sideways. So I love this because, again, it goes back to really having the trading plan and the strategies. All of that is super important. But if you don't have the discipline to follow it and respect it, it's totally worthless, right? So really focus on developing your discipline in your day-to-day life, and you'd be surprised how it translates over into your trading. One example that I used to do all the time, my mentor had to correct me on this. I would say, I would take a trade in the morning, and then I'd say, okay, well, I'm going to have lunch. I'm done for the day. And then, by power hour, I was like, hey, look what I just did. I caught this. And he's like, you're not keeping your word to yourself, right? You're too comfortable lying to yourself. So instead of saying I'm totally done for the day, I might say I might be done for the day, but I'm not going to be so definitive. Because what happens is if you get comfortable, breaking your rules to yourself, then you're going to be comfortable breaking your rules in your strategy. So like, let's say we have a 10% stop loss, right? And we're down and we're just about to hit it. And then let's say we cancel out that stop and we add one at 20, right? Because now we're comfortable not keeping our word and respecting our rules, right? And so now, now it's dropping. Let's just take the stop off completely. So now you sit there and kind of bargain with yourself. You're like, okay, let's see what happens at 30% or 40% or 50%. Once you sort of get laxed in your rules like that, it's literally like, it just opens the door for so many other mistakes. So the smallest little changes with your discipline is everything. Like it's literally the key for you to really be able to develop and stick to and respect your strategies and your plan. All right, so the blindness trap, this is actually one that I used to struggle with too. But situational blindness can make it worse, right? Even people who aren't specifically going out and seeking like the confirmation from others, a lot of times they'll just shut out the market realities and do nothing but postpone the day when they have to confront their losses. If you know deep down there's a problem with an investment, but you just avoid, confronting it, you're probably suffering the blinder effect. An example of this is like detachment. Has anyone ever taken a trade or maybe made an investment and you just started losing money? Like it just started hemorrhaging money. And instead of like stepping in to really mitigate that loss or cut the loss or, research what actually went down, you just close your brokerage out or you close your laptop and you just go do something else. Like you just completely blank out. This makes it worse, right? This makes it worse. So anytime you have the opportunity that you can go in and mitigate, and I'm not talking about shares, right? Because shares, if you have a strong company over time, we know stocks go up over time if there's not something fundamentally wrong with the company, right? Right now, there's a lot of amazing companies on clearance, and there's also a lot of companies that are, where they belong, I believe. But nonetheless, over time, we should see a recovery at some point. Historically, we should see a recovery, right? So I'm not talking about shares. Options are different though, because we're on a shot clock, right? Options have a timer. We can't rock out with those forever, they expire. So when we're talking about options positions, especially short-term options positions, we do not want to let them totally bleed out. Because what can happen is, let's say you respect that 10% stop loss, you have 90% of your money that you can go and reinvest. at a better entry, a better setup, a better move, right? So don't ever forget to play defense. A lot of investors come to the market and they just play offense. There's no defense at all. So your first job should always be to protect your initial investment. Our second job is to grow from there. Right? So don't ever forget that. All right, so the relativity trap, this is a big one too. Oh, can you guys hear me? Okay, I think, can you hear me? Okay, cool. Sorry, my internet thing said something. All right, so the next one is our relativity trap. Don't compare yourself, your investments, or your portfolio to others. You definitely can be aware of what other people are doing and saying. Like, I'm big on community, but other people's portfolios, they're not our business, right? That's their business, their situation, not relevant outside of their context. You have to invest for yourself and only in your own context. This comes down to like your risk tolerance, your position sizing. This was a big one for me too. I started trading like later in life, and I started getting students that were coming to us that were, trading out of their Roth, out of their 401k, and they have these huge accounts with all this capital. And I'm like, how are my students running up, 6 figures, and I'm over here like building up, right? So it doesn't matter. They're starting from a different place. So don't compare yourself to anyone else. That's a portfolio killer. Also risk tolerance, right? My mentor, he trades out of a 7-figure portfolio. So when I first started trading with him, I was like, okay, he's going big. It only makes sense that I should go big, right? No, wrong. He told me straight up, your risk tolerance should not be higher than mine, right? There were times where we would take an entry together and he would get out and lock in profit. And I'm over here glued to it, trying to squeeze out every dime. And he was like, you're doing too much, right? Your risk tolerance is crazy. You've got to relax. So that helped me develop. But again, I was comparing myself and it literally had nothing to do with me, right? This is my journey, my portfolio. I got to do it on my own terms and my own time. So just remember that. Do not compare yourself to anyone else. All right, so irrational exuberance. This is essentially when investors start believing the past equals the future. They're acting as if there's no uncertainty in the market, right? There's always going to be fluctuations, ups and downs, bubbles, overheated stocks. But believing the past predicts the future, that's overconfidence. Greenspan famously said, irrational exuberance is where investor overconfidence turns to greed and pumps the market up to a point where a huge correction is inevitable. The investors who get hit the hardest, the ones who are still all in just before that correction, are often the cocky ones who are sure the bull run will last forever. I think everybody that's in the market right now knows someone who has been affected by this. And I personally believe that really during 2020 and 2021, we really saw irrational exuberance kind of play out. Like we're seeing it happen now. The market was hitting all-time highs and inflation was shooting up with it, right? Things were happening behind the curtain that a lot of people weren't aware of, right? They just saw green. They saw the indices hitting these all-time highs every week. Everything was all good until it wasn't. So don't, just be mindful. What goes up comes down, goes back up. It's a cycle, right? It's always a cycle, but don't be that person. I had people saying the S&P was going to hit 500 by the end of last year, and here we are, sub 400. So irrational exuberance is a real thing. So your pseudo certainty trap. This one, I don't want to say it's funny, but this is really interesting, just how the human mind works, right? So investors avoid risk when their portfolios are performing well and could bear more, and they seek risk when their portfolios are struggling and don't need more exposure to loss. This is largely due to the mentality of winning it all back. Investors are willing to raise the stakes to reclaim capital, but not to create more capital. So I love this little quote: how long would a race car driver survive if he only used his brakes when he was in the lead, right? So we always want to use risk management, no matter how big our portfolio is. Our risk management should be steady, right? It should always be there. We don't want to run up a large amount of money and throw risk management to the wind and then give it all back to the market, right? We want to be consistent as we grow. And then again, this goes back to your revenge trading. You'll see people that take a loss. The next time they go in a trade, they go bigger. You know, they don't use a stop. They don't care about the reversal. They're going to ride it out regardless because they have that small chance that they're going to make all their money back. But that is not how we do this, right? We're in the building mentality. We want to build our money wall up brick by brick, safely and consistently. All right, so the superiority trap. This goes back to your overconfidence, but a lot of investors are overconfident. They think they know better than the experts or even the market. Just being well-educated or clever doesn't mean you wouldn't benefit from good independent advice. Doesn't mean you can outsmart, the market makers. It's a complex system of markets. Many investors have lost a lot of money being convinced they were better than everyone else. These people are easy prey for some of the other traps we went into. So I like to talk about Warren Buffett. I'm a huge Warren Buffett enthusiast, but not only him, right? One thing that we talk about in our group is like, I like to study the greats, like the great investors and how they behave and how they act. So if you get on Twitter, you'll see people saying, they're the best, they're the greatest, nobody does it like them. But then you see people like Warren Buffett who have amassed this insane portfolio over years, right? It took him time, but he still reads 6 to 8 hours a day, right? Warren Buffett is still a student. He's still willing to learn. He's open to learn. And this is like, to me, this is everything, right? So if Warren Buffett is still a student, who am I to say I know it all, right? There's always more to learn. There's always more to develop and get better at. So I just think that's so important to like really look at the greats, like the real, top dogs in the finance world. And that's who I aspire to be, right? I want to study those guys. All right, so this is a quote from Einstein, but we cannot solve our problems with the same thinking we use to create them. And so this is a little cartoon, and I absolutely love it because I feel like anybody that trades options has experienced, if not all of these, at least some of these. But yeah, this, again, like mindset to me, it's just everything. Like everything we do in the market, it has to come back. We have to bring the right mindset. The market, if you guys, I don't know the exact percentage, but I want to say it's upwards of like 90% of people fail, right? That come in and try to day trade. So if you understand that the market is designed for retail to fail, then you really understand how important it is to bring the best version of yourself to the market and really like take yourself to the next level mentally. Also skill, right? Skill is important too, but like mentally, you got to get there first. And I just think like in order to succeed and be successful in this, you really have to like just really buckle down on the mindset piece. But this is like the last slide that I have for you guys. If you want to tap in, our Slack again is free. We have a ton of free resources on the site. We have some like live classes. We do like private mentorship, things like that. But yeah, that's all I have for y'all, David. Does anybody have any questions?
Yeah, we have a few minutes left. If there's any questions, go ahead and type them in the chat.
Oh yeah, so the site, it is investingbay.com and services. So we have live classes, like we do a monthly cycle of live classes. I'm a scalper, like I love scalping. So this Saturday, we're doing a live scalping masterclass. It's called the mental game of trading. And so that's like our flagship class. We do have a Bay Pass, which is like our weekly mentorship. We do like live trading sessions. We have our book club through that. If anyone's interested in Bay Pass, we do have like a free trial. It's like, I think it's 7 days, and you can do like throughout the week. We do book club twice a week. We do pop-up trading sessions. We have our Sunday live class. It's called the mental game of trading. But yeah, and then we have the community. The community is free. I think on the site, we still have our free resources up. There's like a risk management guide. There's a stock market resource list. And I'm forgetting something. Oh, how to build a watch list. There's a how to build a watch list thing. What instruments do you trade? I like options. I'm a huge options fan. Huge options fan. I predominantly trade SPY. I actually traded SPX today. But yeah, I do love my options. But I also do long term. Like, I think it's really important when you're investing and even trading, right? Because I like, that goes back to like your personality, right? I know I'm not a patient person. So like I have a long-term portfolio, I have a Roth, and then I have my scalping from day to day, but that money goes into my long terms. So it's just separate because I don't want to look at it, right? I'm not patient. So that's something I had to learn about myself. I think it's super important to really do like a deep analysis on who you are, what your goals are. What does your time look like, right? If you work full time, if you're in school, if you have kids, like if you have other things that consume your time, find a trading style that fits into your lifestyle. There's a way, like where there's a will, there's a way, right? When I worked full time, I was a swing trader. And now that I'm at home all day, I can scalp. So it doesn't have to be all or nothing. Oh, this is kind of a funny story. So my defining moment was actually, I would say it was at the time, I thought it was my defining moment, but the market humbled me. So I don't care to share this with you guys. I started trading and I quit my job after 6 months, right? So in my mind, I was like, I'm making all this money from the market. I make more than I make at my job. I literally told my boss, I'm not coming in until 10 because I have to be at home for market open, right? So I just had this horrible attitude. And I was like, I'm going to be a full-time trader. So eventually I stopped showing up to work and I just ultimately quit, right? So that was premature. That was very premature. Not that I didn't have money saved up because I knew in my mind I wanted to do this full time, but I didn't have a full handle on the economy. I didn't have a full handle on the charts. I just so happened to come into the market at a time where we were on this massive bull run and there was a lot of luck in there, right? Which turned into overconfidence. And I felt like I was this, master trader when in reality, I had just hit on a lot of lucky plays. So that being said, I quit my job August 2020. And in September, if you guys remember September, we corrected and I had no idea what was going on. So I totally was like in shock. I was like, I'm gonna have to send my boss an edible arrangement and beg for my job. Like I would say that was like my defining moment as a trader because I either had to figure out how to learn this for real or I had to find a job, right? So that's really when I made the decision to take this seriously and actually learn about the economy and all the economic indicators and all the reports that go on and the charting. Like that's when the light bulb went off, but it didn't happen for me till after I quit, unfortunately. But it did work out. I think my mentor is actually in here. Jay's in here. Jay really taught me, like, he took my technicals to like the next level. So like charting is like my favorite part of all of this now. I love charts. I love scalping. But that took time. Like it absolutely took time. It took mistakes. I just hate to I know people see my plays and things like that online and they're like, it happened overnight. It did not happen overnight, right? It did not happen overnight. It definitely took time. We set up, I don't know if you guys are familiar with back testing, but like we go on demand on Thinkorswim and we literally back test till like 2, 3 in the morning, right? Like we're constantly practicing our charting, our setups, our entries. Like it's a grind. So I don't want anyone to ever think that this just happened for me because absolutely did not. Let's see, I think I got all the questions. It's a stressful story. It's beautiful now, but it was a little shaky in the beginning. Yeah, thank you guys so much for having me. And I'll drop the link in there again for Slack if anyone needs it. It just depends on how hands-on you want to get with it. Like we do have our diamond program, which is like, that's like literally us like holding your hand, walking you through everything. We're like pretty much on call. So you can like text us anytime you have questions. We live trade with you, things like that. And then we have like our Bay Pass, which is like a monthly thing, but that's groups. So it really just depends on how hands-on you want to get. But on the site, everything is like laid out on there. Okay, yeah, it's called the mental game of trading. Yeah, no problem.
Okay, any final questions for Alaina? All right, I think that's it.
All right, thank you.
All right, thanks, Alaina. All right, so that was our 6th presentation for today. We have 5 more coming up, and Jim Simmons of NS Trading Academy will be next in about 10 minutes here. So we're going to take a short break. And just a reminder, I am recording each of the presentations individually, and I'm working on getting those processed here while we're doing the event. And those will be on TimingResearch.com as soon as I can get it posted. Also, if you search for Timing Research on YouTube or your favorite podcast app, you can get the recordings there as well. So, like I said, we're going to take a short break and be back in about 10 minutes.